Like you said, Guaranty Trust Bank did announce last Friday that it will be divesting from its non-core banking subsidiaries. Joining us in the studio to give us a little more on that is the Deputy Managing Director, Mr. Segun Agbaje. Thank you very much, Segun, for coming on to the program.
Good morning.
Right, let's start. First of all, banks did have the option to embrace the holding company structure, but obviously Guaranty Trust Bank has not done that. Why is that?
Absolutely. The holdco structure has double taxation implications. There are other implications, and we didn't believe it was well researched enough, and so we've pursued an option that we believe we're totally in control of.
Okay, and give us a sense of a timetable now. You have 10 subsidiaries, including an asset management company, a registrar's business, obviously the insurance company, Guaranty Trust Insurance, which is listed. What's the timetable for the sell-off?
Well, I guess the 10 companies you would be referring to would also include the SMEs. We don't really consider our SMEs really as part of the subsidiaries we're divesting from. We have 4 main subsidiaries we're divesting from. We're hoping, if things go well, to be done by the end of this financial year.
All right. And then give us the cost implication of this divestment.
I don't expect it to be very large. The only listed company we have is Guaranty Trust Assurance, so maybe we will pay the statutory fees. The others are pretty closely held, and I'm sure if we don't get an overpriced arranger or advisor, we'll keep it low.
All right. We'll be looking at that and see how it plays out. But let's talk more specifically on GTA. What options in particular are you looking for? Like you mentioned, it is a listed company.
Well, GTA, we own about 67% roughly of Guaranty Trust Assurance. We will either sell it completely to one core investor or two, or we might do a combination of a share sale and a scrip dividend to existing Guaranty Trust Bank shareholders. The whole thing will unfold as we move along.
Okay, and give us a sense of the scope of your business, because now we know that banks can either be national, regional, or international in their scope. Where is GT Bank likely to stay?
Well, we'd like to believe we're an international bank with the circulars come out when Ghana, Gambia, Sierra Leone, when all the Anglophone countries in West Africa were in London. So the natural fit we have would be as an international commercial bank.
So you're likely to stay that way?
Yes.
Okay, now give us a sense of your view of this whole change in policy, because I think it's somewhat radical. A change from the universal banking structure which we had in operation since 2000. How do you think it might impact on the competitive landscape of business?
First, I'd like to say it's not as radical as you've pointed out. Everywhere in the world today, including America, people are saying maybe banks should go back to core banking, and you'd want to reverse the Glass-Steagall Act. I think that's just part of it. People want proper regulation. They want proper supervision. It'll protect depositors better, and so I really don't think it's that radical. I think it's the way the world is moving.
And the last point, very quickly though, any guidance on Q3 performance? We know you did give some guidance for a full year at about 40 billion PAT. Are you likely to meet that?
Yes, we're on track. I think half year was 27 billion PBT. I think we're still on track for around 40 to 45 PAT.
Well, unfortunately, we've run out of time, so we can't take it much further. But thank you so much for coming on to the CNBC Africa.
Thank you.
Thank you. Right, that was Segun Agbaje giving us his thoughts on the divestiture of GTA from its non-core banking subsidiaries.